JP Morgan, what do you think, having had time to kind of dig through the numbers?
Well, I'm going to get Joe's confidence and analysts back.
Yeah.
$11 billion is what we expected them to earn between revenues and expenses, if you net those two things out. The market consensus was $11.5 billion. If you actually take the numbers, it was $11.1 billion, which is right, close to what we had, but right in the range of what you would expect. Two things that we saw that created the difference, provisioning, taxes, and unusual items. So that's where you really have the difference happening outside of revenues and expenses.
All right, we've got Wells Fargo's in a couple of minutes, and we'll stick around to talk more about that. Richard, what do you just think about what we're hearing at the beginning of earnings season? No, it's very early. JP Morgan, Citi kind of out there, but based on what you're seeing, what does this tell you?
Well, I think, Becky, I think the story for 2019 as a whole is that profits growth is going to slow, and slow pretty dramatically as we go through the year. And what will happen as each quarter, as you get slower and slower profits growth, you get a larger percentage of companies reporting negative earnings surprises. And so I think we're starting to see the tip of the iceberg on that. And each quarter as we go along, we'll see more and more negative earnings surprises.
You don't think the numbers we've gotten so far can be explained away by the fourth quarter volatility, and we maybe need to hear how January is going before?
Oh, for the financials, maybe. Yeah, I mean, but yeah, I mean, it kind of depends. Certainly, when the high yield market shuts down, that's not good. But yet, a lot of the trading desks should have done pretty well, and I'm not sure they did.
Tom, what do you think, just in terms of how much of that bad news has already been factored into what we're seeing in the markets right now?
I think it depends on how much is like a speed bump because of trade. And you have to remember, the fourth quarter, we had like a black swan in liquid markets, right? There was almost no liquidity and a lot of volatility. I don't think banks can make a lot of money there. Versus how much is a slowdown in the global economy. I think most of this is actually speed bump, and so I think even if expectations come down, I think stocks do okay in earnings season.
Who do you think leads the way? Which sector?
Well, we just published our sort of like seasonal analysis on this. I think that the investors are really gravitating towards quality cyclicals right now, meaning they don't want to really be in growth or value. They want to be sort of in the middle. And I think growth works a little better because people are more comfortable owning something that can grow even if they're not sure about the global environment.
Richard, what do you tell people to do right now? If we are going to see those numbers coming down, we've also seen a big takedown in equity prices. So what happens?
So I think there's two things. One is you do have the volatility from the fourth quarter, which I would say was kind of a disconnect from the fundamentals. It was disproportionately large relative to the fundamentals. So to use Tom's analogy, yeah, there might have been a speed bump. But the question is how smoothly paved is the road for 2019 once you get over that speed bump that Tom said. And I think there's a lot of potholes. And I think there's going to be more potholes. That being said, the market probably does reasonably well for the year.
Noah, last word from you after sitting here with us for 2 hours. Your thoughts on what
without snacks.
Without snacks. Well done.
I mean, I kind of agree. I mean, the issue is there's some secular growth areas out there, certain areas of technology, migration to cloud, AI. We're finally going to get the 5G wireless build out that we were looking for, new medical devices. The problem is when you get those big whooshes down, like in the fourth quarter, there's really nowhere to hide in the sense that they take everything down even with a good secular outlook. So I think those are the opportunities for the secular growth names. But you're going to this volatility is here to stay.